I've had a few people get in touch asking about land trading, specifically, what does it entail? What's the process? And more specifically, how do I go about making a profit from trading land? What I'd be saying to people is land trading certainly isn't a no money down strategy. There's a lot of people out there, probably, those trying to sell courses, who would be telling you that is the case, and it's certainly not. You certainly need to have plenty of capital for things like legals, consultants fees, surveys, planning fees, everything that will take you from securing the site to obviously obtaining planning permission and trading the site on. This video will be like 10, 15 minutes long, so I'll guide you through steps at a high level, but ultimately you're only going to learn this stuff by doing it. So, like I said, if you can just start looking for sites, start speaking to owners, start educating yourself on creative deal structures. So, those conditional structures like options, subject to planning, joint ventures, promotions. And then, like I said, you just, you go from there. But ultimately, you need to be working with people at the start who have expertise and experience in doing this type of stuff. I think it would, you'd have to have quite a big ego to think that you could jump into doing this stuff immediately. And obviously you need people with money as well. So it's not the same as going off and buying land, don't get me wrong. But you still need to be able to fund the start of the process. Like I said, the legals, the planning, the due diligence, that's it. So I just told you through there's a map here, which I did a post on last week, but it's just, it's a great map for giving you an indication of the type of sites that are available. Now, confidently say, you could give me pretty much almost any map in the country and be able to find development sites, okay? That's not really the issue here. There's always going to be underdeveloped land. There's no one out to assess the constraints associated with these plots. So things like I said, architectural constraints, highways constraints, commercial constraints, okay, relating to the buildability and the commercial viability of the site, i.e. sales values, okay? But just on this map here, right, so this is step one. So you're going on the land zoning maps, you're going on the Google Maps, and you're looking for underdeveloped land. Now, personally, my strategy would be looking at land that's suitable for anywhere between one additional dwelling and maybe, I don't know, say 20, 25 units. Okay, so these bigger plots of land, like I was saying in another video, these are generally going to be for your bigger guys. Okay, not always, but generally they're going to be developing these large sites. And I think there's a definite gap there to be looking at these smaller sites. Now, like I said, from my perspective, I am looking to work with landowners, other developers, builders, consultants in these areas who are interested in developing these type of plots, the smaller SME type stuff, if that makes sense. Okay, so again, I'd be staying away from this stuff here, but certainly, smaller plots like you've got here. You've even got your one-off plots in the right areas where your sales values are north of 300 quid a square foot. You're a nice plot there. There's potentially a plot there. And again, I won't go into the finding land because I think, if you watch my other videos, you can go on the YouTube, the LinkedIn, the Instagram, there's plenty of information there. People know how to spot underdeveloped land. It's just a matter of being able to assess the constraints, okay? So step one, find land, assess constraints, okay, and identify development potential. The next step is you need to contact the landowner, obviously. So we use this letter here. I've blanked out the particulars, but ultimately, I think there's two advantages of using a letter over knocking on people's doors, which is what people are generally doing. One, I think it's more efficient, and two, it's definitely more ethical. Okay, people don't want you knocking on their doors asking if they're going to buy land. There's obviously a lot of vulnerable people out there. A lot of these landowners are elderly people. I I just don't want to be doing that. So I find if you send a letter, you word it in the right way, you come across as professional, you give them details about yourself, which allows the landowner or their family or their representatives to go off, do their due diligence on you and on your company, and then pick up the phone if they're potentially interested in having a chat. Okay. The other side of the coin is a lot of these plots would just be land. There is no door to be knocked. Okay. So obviously you need to go onto the land registry, find the owner's details, and sign the letter. Okay. It'll cost you a fiver plus the cost of a stamp and an envelope. But yeah, that's the way we do it. You can see how I word it generally. Obviously, I'm giving away all the detail there, but yeah. Let's say you send the letter off, okay? The landowners got back in touch and they're interested in potentially doing a deal. What do you do next? Okay. First, you have a honest and transparent conversation with the owner. You need to tell them, what you're looking to do potentially, obviously, and listen to what they're looking to do. Like, it's effectively a fact finding and relationship building exercise where you're looking to extract in a nice way as much information as possible. So then you can go away and, like I say, do your due diligence and see if you can come up with a scheme that creates a win-win for yourself and the landowner. Okay, this isn't, and I think a lot of people get bogged down in this. You aren't trying to get one over on the landowner. You're not trying to purchase the land at their expense. And obviously, a lot of people a lot of landowners would be open to a deal, but they don't want people building a massively, I don't know, like a dense site at the back of their garden. They don't want the Adams family moving in next door. All this type of stuff outside of money comes into play. And a lot of people fall into the trap of thinking that it's purely about numbers. And I tell you from experience, that's not the case, okay? Sometimes people will want to get involved in maybe joint ventures and they want to retain an interest in what's being built, okay? So this is where you listen, like I said, you take on board what you're being told, and then you go away and do your due diligence, okay? Now, during this initial due diligence, let's call this step 3, okay? You need to go away, start speaking with consultants, so architects, planning consultants, engineers at a high level, speaking with development consultants, maybe having a chat with builders about build costs in the area, speaking with, I don't know, housing associations, seeing if they've got any interest or requirement for land in the area, doing your comparables. So you're doing what I would call like mid-level due diligence, okay? Just to get yourself to like a rough land value, okay? Because all you want to be doing is going back to the landowner and running a number by them that you think you might be able to get to, okay? So let's say, for instance, the existing use value of the land is 250 grand, okay? So this is the value of the land today without planning permission, okay? If you go back to the landowner and you think the land's maybe worth £500,000 subject to you being able to go off and obtain planning permission, obviously your time and expense. If you run the number by them, and let's say it's 500 grand, and they turn around and say, I want £1,000,000, well, there's no way I can make this deal work. You move on to the next potential deal, okay? But if they turn around and say, well, we were thinking more like 700 grand, okay, or 600 grand, then okay, this might be worth spending a bit more time on, okay, which is what you do. Okay, so let's say you've agreed in principle a number of 600 grand. You've met the developer, you've met the landowner in the middle. This is when you need to go off and do super due diligence before you commit to entering into an option or a conditional deal of any sort. Okay, so this is when you need to go off and get building surveys done, ground investigation surveys, topographical surveys. You need to get copies of maps for site services. You need to get you need to be writing to local service providers to check the infrastructure is available for you to develop the site. You need to be doing need to be doing all of this stuff. Okay, and there's another 20 items you need to do, which is why this stuff isn't easy. Okay, obviously QS on board with build costs. You need to be looking at abnormals that could prevent the commercial viability of the project. Okay. But once you've done this high level due diligence, which comes with a significant cost because you haven't even agreed an option at this stage. I mean, you could be at the point where you've spent 10 grand plus without even having an agreement in place, which is why this stuff is so risky. Then you agree an option, okay? So how an option works, and it doesn't have to be an option. It could be a promotion agreement. It could be a joint venture. It could be a subject to planning agreement. But as a developer or a trader, you preferably want an option agreement. Now, the reason for this is an option gives you the option to purchase the land without the obligation, okay? So if land values tank or build costs go through the roof, as they have done, okay, you have an opportunity to walk away from the deal, which is actually what a lot of developers have done over the last few years. People have gone out, they've obtained planning permission for sites which are commercially viable, and they've walked away from the deal. Now, I think a lot of the reason for this is people are too quick to commit to the options. They haven't gone away and, like I said, done proper due diligence. They haven't maximised the efficiency of the scheme. So, looked at unit types, looked at unit sizes, tenures, looked at, potential abnormals. So people are trying to jump the gun, if you like, okay? And I've been guilty of doing that myself in the past. And it's an expensive lesson to learn. So you want to get that option, and obviously once you've agreed the option with a landowner, okay, the deal should look something like, let's say you've agreed an option at 600 grand. The existing use value of the site was 250 grand. Well, great. The landowner's just got big increase on the site value, okay, at no cost to themselves except time, okay. And the developer, i.e. us, we're going off and taking all the risk of obtaining planning permission to increase that value. Now, if you've done your job well, that land with the benefit in planning permission should be worth a lot more money than you've agreed to pay the landowner. So let's use round numbers, okay? Existing use value was 250 grand. You've agreed to pay the landowner 600 grand, okay? Which means they've got an immediate win. But if you can make that land worth £1 million, that obviously gives you potential profit of 400 grand less your costs, okay? Which is why these deals are so attractive to people. I said there is massive risk there because you've obviously paid for all the surveys. So what you ideally want to be doing is you obtain your planning permission, okay? You've signed up to this. This is a blank option agreement, okay? I won't go through the detail, but this is like a 14-page document, which is your agreement with the landowner to purchase that land, in this instance, for 600 grand, right? You're going to sell your piece of paper effectively to a developer or an end user for £1 million, okay? Which means you've novated the agreement across, okay? They're going to step into your shoes as developer, and obviously your profit is the difference. Now, a lot of people say to me, is this not unethical? You're only paying the landowner 600 grand and you're selling the site with £1 million. Well, no, not at all. We've come in, we've added value, okay, to the site. The landowner was selling a site that was worth, what was it, 350 grand. We're giving them 600. Our profit for doing that deal is the difference, okay? That's exactly what trading is. I think generally, if you tell landowners this is what you're doing, generally they've got no problem as long as they're getting their money. So, like I said, this isn't a no money down strategy. You do need experience, which is why I'd suggest teaming up with experienced professionals in the first instance. From experience, I know there are consultants out there who like a bit of risk, and they're even willing to come in as part of a joint venture into a deal and obviously do some of this stuff up front at their own risk. So maybe look at creative deal structures that way. And like I said, from my point of view, the reason that I'm sharing this information is because I want to start doing deals with people as well. So if you're a landowner or a startup developer, or you have an interest in land in the country, give us a shout. I'd be more than happy to start helping you assess the development potential, share some of the mistakes that I've made along the way. And if not, obviously, good luck.